Okay, and we are live. Thank you to the 100 people who are already tuning in. I'm Boris from Aligned, and welcome to another session, or rather a Aligned guest stream. We do these streams most Wednesdays, or at least a couple times a month, and basically what these are a great chance for our community and me personally to learn about exciting projects within crypto, specifically within ZK and Ethereum. And today I am very excited to be hosting Akash, who is the founder and CEO of Formica. I will let Akash explain what Formica is. And there's a lot of sort of history that I think will be exciting to go into because Formica comes from 3MI Labs, which is a research partner of us at Align, who we've worked with and collaborated with on a lot of very technical topics. We announced a partnership with Formica, I guess, at the beginning of this week. And yeah, I think this is the first time that Akash is sort of giving a public presentation about what Formica is building. So I'm excited to have this exclusive first look into the project. And with that, Akash, thank you for joining. Welcome.
Thank you, Boris. Thanks for having me. And then thanks to everyone who's tuning in. 100 people, you said, like, it's really exciting to share my idea of Formica with so many people. I really appreciate it. I think we can maybe start with like an intro about.
I would love that. Yes. Yeah. So like tell us about yourself and your background and your story.
Oh, perfect. Yeah, I love that part. So, well, hi, I'm Akash. I'm the co-founder and CEO of Formica. I guess my path has been a bit of a mashup. And, I've seen some of the previous streams, and that's quite true for most of the people in this space. So I grew up in India. I lived there till I was 22 years old. I did my bachelor's of computer science there. And somehow, let's call it 75% luck and 25% dumb luck, ended up in Belgium for working as a software engineer at one of the biggest Belgian banks. It's called KBC. Now, that job was actually very useful because it really taught me a lot about basically the real world UX and how security needs to be, and it for like consumer facing apps that are like so critical for users. So I did that for like 2 years. And then I realized that actually the city I live in, it has a really good school. KU Leuven, I think world ranking wise, it's very popular and also for innovation. So I decided to spread my wings a little bit and actually get a master's in AI. And this was back in 2017. So I can actually say that I did this before it was cool. And also with a wink, like I actually did it before it was cool. But during that master's, I actually met some people from COSIC. So COSIC is the department where I did my PhD. And this is like a sideline, but COSIC people are legendary. So one of the professors there, he was a co-inventor of the advanced encryption standard. And these are the people who also hacked Tesla 3 times. And yeah, multiple times. And if there's a YouTube video like COSIC researcher Tesla hack. Like if you're into that kind of thing, you should definitely watch it. It's really cool.
Jailbreaking Teslas, I love that.
It was really cool, actually. The video is very cinematic and shows exactly how a Tesla can be hacked. And that meeting that got me into my master thesis with COSIC while doing a master's in AI. And it was about implementing this keyless car sharing protocol on Ethereum, right? So the use case was of a sharing economy. The use case itself, the protocol itself was extremely secure because it was designed by the people who have hacked cars before. So I kind of fell down this rabbit hole of cryptography and distributed systems. So AI kind of got a backseat while I was doing my master thesis. So following my thesis, I did a PhD at COSIC, which was about applying cryptography to make decentralized applications more secure and scalable. And I've written at length about this topic. So if anybody wants to see my thesis, please feel free. Then I joined 3MI Labs, and this was 3 years ago. First as their head of research, and then finally their CTO, and actually worked with a bunch of Web3 startups. So what we were doing at 3MI Labs was translating research into production and actually proving security of these protocols mathematically and building systems that actually work in the wild. So across these startups, while I was working with 3MI Labs as the CTO, the same bottleneck kept showing up. And that was that payments on blockchains are clunky. And they're very capital inefficient. So that frustration kind of led me to start Formica. So yeah, basically banking, AI, crypto, startups, and like a little bit of along the way, in my personal background.
That's an awesome story. Yeah, I feel like most people in crypto to some extent have a bit of a, you know, non-linear or idiosyncratic background. Like it tends to attract people from a lot of different places. I mean, I know on our team we have a physicist, chemical engineer, and a biologist. 3 PhDs, all working now in crypto. I don't have the PhD yet, but I should by December.
All the best.
Thank you. Yeah, that's awesome. So before Formica, even can you tell us a little bit about 3MI Labs? Because honestly, I've meant to get 3MI on a stream to talk about the work we've been doing together. And I don't want to spend too much time on that, but I think it's interesting and useful context as well here.
Yeah, 100%, 100%. So, well, 3ML Labs, it's a cryptography research house, right? So when I say research house, I mean it. We had a team with 7 PhDs, most of them from COSIC, working on cryptography problems. So the idea is that secure protocols, they're deceptively hard to design. It's not just about your algorithm. It's about how your protocol interacts with like different wallets. It's about interacting with other protocols, off-chain services, and like many interaction points and even adversaries, right? So even if you miss something small, someone finds a way to lose millions. So at 3ML Labs, we basically helped projects design protocols that were formally proven to be secure wherever possible, and then translate those into real world systems. And as I mentioned before, like my time there really exposed me to dozens of dreams trying to solve like a lot of very nice issues in the Web3 space, including Aligned. And that's basically, like working with these founders in real time, helping them solve their problems was kind of addictive because you kind of get lured into their passion. So yeah, that's
Cool.
3ML Labs.
That's
Yeah,
3MI
yeah.
Labs. Yeah. And
I
3MI
suggest
Labs,
having Tomer, by the way, on the stream as well. We
yeah,
would love
yeah.
talking to
I meant to. Yeah, he's on my list of people to invite. For sure, for sure. Yeah, I haven't actually met anyone from the team yet, but I know that our side we talk to you guys a lot and quite frequently about Formica and also other stuff with 3MI. So definitely need to get Tomer on here. For people who don't know Tomer, what should they know about Tomer?
So he's the guy who designed hash primitives that are used in Starknet, Polygon, like these big valued companies. And he was also a part of the team that hacked Tesla, by the way. So
Cool. Cool. Yeah, that's awesome. And he's also a co-founder of Formica, correct?
he is also a co-founder of Formica. Yes, that's true.
Yeah. He sounds like a very interesting guy, and here's a bit of a cryptography savant as well. I think you said that on your website. So, we definitely need to get 3MI in here, and we did some cool stuff last year. I remember, well, I wasn't involved in it, but the finding bugs in zkVMs, for example, like really important issues. So something you said that reminded me of a funny quote, something I read on Twitter, of course, but it's like talking about building secure systems and how complex this can be because there's so many moving parts, so to speak, a lot of interactions with other entities, wallets, users, pieces of infra. There's whenever there's a hack, people like to say, there's $1 billion trapped in your computer. You just need to press the right buttons in the right order to get it out of there.
That's true. That's true. And like how basically easy it's to break these systems. Like I'm sure you heard about the NPM package hack that recently happened. That was scary. Like this one poisoning attack on a package can do so much damage, even though luckily there was no damage that happened except like $20. But still, it was
thankfully, yeah. But then you see other things like the hack with, was it that exchange, was it Bybit or something? Fiat, like earlier this year, through a compromised safe multi-sig front end. Like that's like crazy. Like that's something they didn't expect. So
100%.
Yeah. So anyway, coming back to Formica, I want to, of course, just have you explain what Formica is. But it's really a two-part question, and you can answer this however you think is best. Both what is Formica, and where did the idea for it come from? You already touched on it, having worked with a lot of different protocols and noticing payments being a very clunky process that could be improved. So yeah, what is Formica? How did you realize this was the thing to build?
Okay, so well, I'm sure like with a lot of people tuning in, they might be technical, but I'm gonna give like my mom test answer so everybody understands like what Formica is trying to do. So the problem is that but in Web3 today, everything is pre-funded. So basically, if you want to interact with anything on Web3, you have to top up your wallet before you do anything, right? That's like using a debit card for everything, right? But in the real world, like even if you don't know it, but most payments happen kind of on a credit basis, this credit scenario where you go to a coffee shop, you tap a card, and then you get this amazing instant channel of confirmation. And even if it takes a second, and it is kind of anxiety given that second, oh, I hope my payment gets accepted. But this channel of confirmation, that gets approved instantly and you get your coffee. But actually, there's a lot of processes happening in the background of actually getting the coffee shop merchant being paid and this payment being settled, right? So it's like credit like guarantees, and it doesn't exist in Web3. So Formica is that missing layer that is adding this capability to Web3. What Formica is doing is that it's letting services extend cryptographically enforced lines of credit. So think of it like as speed of Visa, but with guarantees and composability of Ethereum, right? Without banks or custodians. So instead of pre-funding every tiny thing that you want to interact with, which actually is horrible UX and leads to a lot of friction, even efficiency, right? With cryptographic guarantees, these payments will be made or recovered like eventually. So you don't pre-fund anything, every tiny thing, but people and services can transact instantly and non-custodially with you, and you make them whole eventually. So we make instant, trust minimized payments possible across blockchains.
I love the sound of that. I have so many questions, which I think we'll be able to get into, but how this could actually, how the design of this would work and how you can enable this. Because let me just recap to make sure I understand this correctly. I mean, I think I get the problem you're describing, or at least I'm very familiar with paying for things with a credit card. I tap with my phone, Apple Pay, it's instant. Even if the credit card gets declined within a second or two, it'll tell you card declined. It's quick. But basically, yeah, when you pay for something with a credit card, somebody is taking on some risk, right? You're not actually 100%. Giving somebody cash or debiting it directly from your bank account, your checking account. It is a credit card taking on risk, saying, yes, this person's good for this money. And, if I don't pay the credit card back, then, the merchant still gets their money. The credit card then comes after me. So they have this, that's a very simplified version. But yeah, I never really thought about how to contrast that with crypto. It's true. You have to have the funds in your wallet already. You already need the ETH there if you're going to pay for a transaction, or if you're buying something with USDC, like you can't just say, yeah, I'm good for it. You actually have to send the funds, which is a nice feature, I suppose, but also limits what we can do in terms of, how fast you get confirmations, or I guess the scale of these payments as well, right? Like
100%. Like it is impossible to do everything on chain, especially if it's like these tiny transactions, and that will become a norm in the future, right? With like everything that's happening in the agentic economy space and the off-chain compute that's being enabled by Ethereum, these transactions are valued to be sub-dollar. They are cheap, but paying for them, every single one of them, even if you have the fastest layer one, it's not possible. It's a choke point. So you need to be able to enable like these credit like guarantees and this kind of promises that you will be made whole later. And that kind of ties into the story. There was a two-part question, right? And I didn't answer the story part yet. So basically, the story is pretty old about Formica. So my PhD was focused on like decentralized applications and how to use cryptography to kind of make them scalable and secure and decentralized more and more. And I realized that the pre-funded model is necessary in blockchain, right? But it's clunky. And I don't think anybody here disagrees with that it's not clunky. There are workarounds for this. Like I saw a stream that you did with Karel. from Union,
Mm-hmm.
and he was mentioning how there are workarounds like solvers, for example, or like optimistic kind of rollups that actually kind of help with this. But those fixes often rely on assumptions about behavior and kind of enforce behavior that is economic, and that can break at scale, honestly, right?
Yeah.
There is no dependable root of trust in any of the workarounds that exist right now to kind of solve this issue.
Okay.
On the personal side, so that's the technical pain that
Mm-hmm.
I faced right during my PhD. And on the personal side, and I'm not sure if you could relate to this, because like India, growing up in India is different than in the West. But I had this like constant social contract with like a shopkeeper that was close to my house, right? And I would go to them and I would buy a candy for like a rupee. But every time I buy a candy and I have like a 10 rupee note, it would not make sense to change that. Because they would need to change anyway, and I don't want to carry around a bunch of coins in my pocket,
Mm-hmm.
right? So we had this agreement, the social contract, that I would buy candy and I would keep coming to you, keep buying candy, and then you would run a tab for me, right?
Yep. Yeah.
And once that tab hit a sensible amount, I'd clear it with one payment. Like let's say that now I've bought 10 candies from you, I'll pay you the 10 rupee note and it's done, right?
Mm-hmm.
Easy.
Yeah.
So it was efficient and it was human, right? But of course, you cannot have this social contract, this like trust-based contract on Web3, right?
It doesn't scale, and it doesn't work in an adversarial environment.
No, it doesn't. It doesn't work in an environment which is Web3, right? So I kept thinking, why can't we have the same thing, right? So instead of this social contract that I had with my shopkeeper, why don't we enforce something like this with cryptography so it's not dependent on personal relationships?
Mm-hmm.
So for this, actually, I talked to a lot of people, and recently I spoke to Mauro, right? And we were talking about Aligned, and since we've been talking about Aligned quite a lot, he told me about this problem, which is quite obvious and concrete, that Aligned has made proofs cheap, like so cheap as compared to a layer 1 Ethereum, but paying for lots of tiny things is painful. Like
Mm-hmm.
even if you have a proof verification that you've done for 3 cents, you cannot pay it on Ethereum engine. Not possible, right?
Yeah.
So the answer is to this problem a cryptographically enforceable tab or a line of credit, and that's what became Formica.
Okay.
So it's the Shopkeeper tab
Yeah.
from a personal story, but actually enforced by smart cryptography.
And offered as a protocol or some service that people can plug into their products that need these sort of micro payments on Ethereum, for example, or any blockchain, I guess. Cool. Yeah. So there's a lot of very interesting themes here. Next thing I want to ask you about is the architecture, how you can actually create these cryptographically enforceable, micro credit lines. But before that, I wanted to say that I'm very excited about this because I think, I don't know if you've probably been seeing this as well. I think people who are consuming a lot of stuff on crypto Twitter have probably noticed this kind of emerging trend or the growing popularity of like this on-chain credit narrative, right? Other people are talking about this where, a lot of stuff in the business world and in financial services, of course, like relies on credit. Like bond markets are 10 times bigger than equities markets, for example, is a statistic that I've heard and I'm repeating, but I don't know if that's 100% true, but people say these things and it sounds reasonable. People who've said this to me, I don't know why they would lie about this. They seem well informed. So this is something that crypto hasn't really been able to do yet. And we just announced a partnership and a collaboration, one of our roll up as a service customers, Loom Finance, which is something that Lambda class is working on, along with Levenue, also Belgian, I believe, or are they Dutch? They might be in the Netherlands. But it's
that's a common confusion always.
Yeah. But I think maybe the founder is Belgian, founder of Levenue.
Okay.
So we're basically bringing these, creating the on-chain equivalent of what Levenue does, which is revenue-based financing, private credit for companies that have recurring revenue, and they want to take out loans against this recurring revenue. So they are, they have all of the documentation showing that they are making, I don't know, $1 million a year. So based on this, they can get a loan, and they guarantee that they'll pay off the loan because they have this revenue. Basically, underwrites the loan, underwrites this credit, and then they pay yield on that because they're taking a loan, right? And with Loom Finance, we're basically creating the on-chain market for these loans to let these companies who are off-chain, Web2 SaaS companies, for example, access credit from on-chain sources. And in turn, this also brings real-world yield on-chain to people who have capital on, say, Ethereum. So we're providing the infrastructure for that. It's super exciting. And, you've probably heard about 3Jane, which is, I think, using zk-TLS to do some of these things for like consumer lending. There's also Wildcat Finance, which like I personally have like a few thousand USDC that I'm loaning to Wintermute on there, and they're giving me 12%, right? And this is an uncollateralized loan, right? Like people are very familiar with lending protocols like Aave, over collateralized loans, which are not very capital efficient. For example, they're a great innovation having this all permissionless on chain, but they can't really match what real world, like TradFi can do in terms of credit. So there are all these projects now coming out recently to bridge this gap, and it sounds like you're also doing this. But for smaller scale payments initially, but yeah, it's exciting stuff. So your thoughts?
True. Yeah, I mean, it's also like what you're telling me, like about Loom Finance and everything else you told me about, is basically about how to make capital efficient, right? Like you have 1,000 USDC in a protocol, and now you're actually earning yield on that protocol, right? That's the idea of Formica, technically, right?
Cool.
We can, but I don't know if you're there yet with the questions, or how do we proceed?
No. I mean, this is very like, yeah. I just wanted to say that because it seems like it's becoming a much more, it's becoming a topic that people are talking more about. I'm sure we'll see a bunch of, VC think pieces before long talking about, and there already are some. And I think I'm probably gonna have to write some blog posts related to this too at some point. But yeah, that was more of an aside. I am super interested in hearing about the design for Formica, and you mentioned cryptographic guarantees, sort of underwriting these lines of credit, if you want to call them that. How are you going to build this, or how have you built this?
So how we have built this, because our testnet is very soon, right? So the idea, like you just said, Boris, like you have 1,000 USD in a protocol, right? Right now it's sitting there and it's earning yield. Let's say 12%, you just said, right? 12% yield, right? Your money is working for you, right? But now imagine that money that's sitting in that vault, technically a vault, it's non-custodial, you have access to it, it's sitting there. What if you could leverage that vault to actually get this line of credit from Aligned, right? So that's the basis of the architecture of Formica. You have money sitting in vaults, and actually it's a very lucrative thing because you are getting a lot of yield, like at least 5-6% on a lot of different vault providers, right? And you are making money. Your principal is increasing, and it's really an amazing innovation that's happened and has opened access to so many people that earlier had to invest with different Web2 primitives. Is a diversification technically. So you are now using this vault, and then Formica is allowing. So it's like the middleware between the service provider and you being this investor technically, right? This service that you want to use, and in this example, let's say it's Aligned, right? You want to get some proofs verified using the Aligned layer, and you don't want to pay. We've already built this, and you don't want to pay for every one proof that you verify. So technically, what you do is that a bit like margin loans, like you have this investment in bonds or securities, and then there is like this haircut on how much you can get a line of credit from this kind of investment. That's the idea, right? Okay. So Aligned is able to give you a line of credit of, let's say, $15 or $20, whatever, right? And then you start using Aligned services and start getting the proofs verified. And let's say that your tab is running with Aligned, and all of this is being actually kept in check with the Formica core service, which is an AVS, so it's completely decentralized, right?
Okay.
And now the question is, okay, I've reached the tab of $15, and I'm supposed to pay Aligned for all the thousands of proofs that I've verified using these $15, right? It makes sense to pay for this on-chain now because it's a big amount, right? So you could just settle the tab, right? Okay. But the question is, there is this fair exchange kind of element here. Aligned has extended a line of credit to you. It has kind of trusted you that you'll pay them, right? What if you don't pay them, right? Yeah. That's where the Formica guarantee comes in, that for every kind of like this tab that you have with different services, right? You are issuing these like cryptographic fair exchange guarantees, which is basically a signed proof from the Formica core service that you will pay them on chain. If you do not pay them, your signed guarantees can be used by the service, in this case aligned, to go to your vault and take those $15 out.
Okay.
And in none of this interaction, Formica comes in. It doesn't kind of influence the remuneration. It only acts as this enabler between a service provider and an investor to draw up lines of credit and then sort them.
Okay.
Eventually.
Interesting. So Formica, like, will you be offering vaults of your own that people will be able to lock up assets into? Or are you working with existing vault providers to basically monitor that that they're good for the money? Like you said, paying, say, on Ethereum mainnet L1, right? Say a bunch of, it costs 5 cents to verify a proof. The gas for making that transfer will maybe be higher than that, right?
Yeah.
It makes sense to accumulate a whole bunch of proofs that you need to pay for. And then maybe it makes sense once you've verified 100 proofs and you want to pay $5 in one transaction. How I guess we're doing that now is people just deposit to the aligned contract and they have like a balance that gets drawn down. But to avoid people needing to deposit and lock up capital and need to constantly top it up in aligned, then we could plug into Formica, which basically will act as that, yes, they're good for the money, verify the proofs, and whenever they need to be paid, that gets taken care of.
Yeah.
Okay.
Yeah, exactly. So in this case, like the one idea that Formica has been working with is that Rome wasn't built in a day, right? So we are partnering with a lot of different services for different parts of our infrastructure. So when it comes to AVS, we're not doing it from scratch. We're not bootstrapping a decentralized network. We are for now using EigenCloud to like decentralize our core service, right?
Mhm.
When it comes to vaults, we are already partnering and we're in conversations with providers that have vaults, that have TVL already, and it's kind of lucrative for them because what we're enabling is more and more users to come into their protocol, bring them more TVL, right?
Yeah.
While it's sitting there and it's earning yield, it's earning you like money, you are leveraging that and actually doing so much more with that locked deposit.
Yeah.
So you mentioned that, you have this like users come in and lock up collateral, right? It is very true in a lot of services right now. A lot of services require these prepaid top-up kind of architecture, like these cards that Binance and like, I don't know, Coinbase, Visa card, blah, blah, blah,
Yeah,
right?
so many. Yeah.
They're all prepaid cards,
Yeah.
right? It is not capital efficient. And just removing the money from there costs you more money and it's bad UX. So that's indeed the idea, that we're partnering with vault providers and we're like playing the core service, which enables everything in a way that nobody has to trust anybody else. It's all fair. Everybody wins in the end.
Okay. I love it. I mean, so many questions. Like, I'm excited to read a white paper for sure. I don't know if that's something that's coming soon, but I am curious, like this sort of case that just popped into my head as you were explaining this. So I have assets in a vault, and this is saying that I'm credit worthy for whatever microservices maybe I'm accessing, making small payments for, say, verifying proofs of the aligned. What if I just pull everything out of my vault, right? Where does the cryptographic guarantee that I'm good for it come into play if, I say, okay, actually, I'm taking everything out of my vault and draining this address completely that goes aligned, 1 ETH for verification.
Yeah, no, so that isn't possible. So when we're partnering with vault providers, we are curating special kinds of vaults, which have special withdrawal like constraints on the money there. And the trick here is that, when you go to a vault provider, you will be given with like a Formica vault, especially curated for Formica, there will be an option of leverageable and redeemable money, right? So you put your money as much as you want in your vault, right? But you don't have to make all of it leverageable by Formica. It's only the amount that you allocate to, kind of getting a double fold use case out of that money that's there in the vault. You can put in the leverageable one, while the redeemable one you can take out whenever the vault provider lets you take it out, because that they have their own constraints.
Gotcha. So, okay, I'm seeing like the shape of a flywheel forming here, right? Where it probably doesn't really add much extra cost for a vault provider to have this type of Formica enabled vault. And if whatever yield they give to their users to make deposits in these vaults is equivalent, then it really doesn't doesn't take anything away. And on the other side, you're, by working with these vault providers, creating a new product for them in a way that allows people who use their vaults to access more services, a greater variety of services more easily, which I see being very attractive, because it's like, okay, people want to access these services. They would need to pre-deposit something somewhere anyway, but this way their pre-deposit is earning yield. It's in a vault, like it probably would be otherwise. And now any service that integrates Formica, they are easily able to access it, like already by default.
Exactly, and the one key thing here is that your pre-deposit, it's not only serving that one service. It is this one single deposit that's unlocking thousands of transactions across different services. And that's the efficiency I'm talking about. And that is something that doesn't exist at all.
Yeah, that's awesome. Now, I have two questions. One is, like, so you mentioned zero knowledge proofs, I think. You mentioned proofs of you being able to pay off this very tiny loan. I'm curious about that. Of course, we're a ZK project, or rather we use ZK for a lot of Ethereum infrastructure. So I'm curious to hear, like the piece there.
Yeah, so there isn't any ZK. So the proof is basically that there's a core service that's kind of providing you a peerless aggregatable signature, along with a lot of engineering going into designing these like vaults to be able to like be providing remuneration when asked to, right? But there's a lot of factors here to check. So basically, has the on-chain transaction already be settled? And so the combination here is not of ZK proofs, where it's about lightweight cryptography, which is extremely efficient, right? Along with good engineering when it comes to designing the protocol. And that's the combination that's difficult to unlock. And it's not that straightforward to see. And that's what we are kind of releasing in our test network on September end. We're going to make it open source. Anybody's welcome to play around with it, break it,
Okay,
just contribute. Yeah.
Awesome. Okay. Yeah. Well, I'm going to ask more questions about, what's coming next from Formica. But before that, more questions. So, you've talked about, the thread that you've published so far and on the website that Formica can plug into any blockchain, right? It's not just Ethereum, but we can have this value exchange on any blockchain. Like, how does that look? Like, integrating this with Ethereum protocols or smart contracts versus somewhere else, like how the security is coming from Ethereum through Eigenlayer, since you're in AVS or Eigencloud, they're calling it now. What about like multi-chain, non-EVM stuff? Is it something that can work on Bitcoin if there was reason to?
No, there's of course a reason to. Like, I love Bitcoin. There's of course a reason to do that as well. But for now, we're focusing on EVM as like our pilot use case, right? So, but the technology that we have, there is no limit to EVM or non-EVM scenarios. We can do what we're doing with Formica on any chain, including Solana, whatever you call it, right? It can be deployed on those chains. But if you were to ask me, when are we imagining this to happen on Bitcoin? It's not the priority right now.
Yeah.
The priority right now is to get this running, get the partners, and actually enable people to use it in a short frame of time. And given the effort required to make it multi-chain, we would need a lot of more people to work on the project, actually.
Yeah. Totally. I mean, I think we can relate on our end. Like, we have a lot of things we want to build, and we will build them, but there's only so many hours in the day, and so many people we have working on it right now. So
exactly. Yeah, but by nature, it's chain agnostic.
Cool. Okay, that's awesome. Yeah, I mean, I feel like there's some parallels to be maybe explored another time. We'll save it for another stream, between, like, say, the Bitcoin Lightning Network and how Formica could work on Bitcoin, for example. But we don't need to cover it today. We can have another stream later on.
I can just say one thing about Lightning Network. Like, Lightning Network is amazing, right? Like, it's a really good protocol, but it's capital inefficient, right? So you lock up money, and that money is, well, they call it collateral, but it really isn't collateral, because that's the primary source of remuneration, right? So if I'm using a service like a line, let's say I'm using Lightning Network to pay for a line, very cheap, works pretty well, but again, it's pre-funded, right? it's there and I cannot do anything with it. And every time I have to transfer it, it has to go through these fee contingent routes, and the routing itself is complicated. Even though it's a very, very robust solution, it has solved a lot of issues of Bitcoin. It is still capital inefficient.
Yeah.
And it is that pre-funded model I spoke about in the beginning, that all of Web3 is pre-funded and they haven't been able to find a work around it.
Yeah.
So
no, okay, that makes sense. And again, just like highlighting something exciting here that you've talked about. I think what's really cool is, say, to pay for verification on Aligned, right now you pay in ETH, but in the future you can pay with ETH or the Aligned token. But this way, people could use Aligned, a protocol or a company project could use Aligned and not have ETH, or, well, they probably need some ETH, but they don't need to have a lot of ETH, and they don't need to have, say, the Aligned token in their wallet pre-funded or deposited to the protocol to pay. Instead, they can have USDC that's in a vault collecting yield, nice and safe, and that just unlocks the ability for them to pay for verification.
yeah.
So in this scenario also, like, I'm curious, does Formica assume any risk here? Like, how does that look? Like, what I mean by that is Formica paying Aligned for the users who are taking out these like micro credit lines in real time, or is Aligned only getting paid at some predefined intervals from the user? Like, does imagine like a payment processor, Stripe, they're paying the merchant right away. They're settling that instantly, and then they expect that they'll get paid from the credit card, and the credit card expects they'll get paid from the end user, the customer. What about in this case? Like, is Formica paying and then getting reimbursed, or is it just facilitating a later bulk payment?
So that's actually a good question, but there's one key thing I want to point out here. Formica isn't the kind of entity that enables this credit to happen. It's the middleware that is working with different kind of elements to make these lines of credit possible and cryptographically secure. So your question was that Aligned and the user, right? In this case, Aligned is offering a service, which is kind of a credit, like the shopkeeper used to give me candy, and like I would pay them back. That's what's happening in the case of Aligned. But the way Formica works is that, for now, this is the first iteration. Our infrastructure is configurable when it comes to TTL and the service level agreements. So let's say that TTL is time to live. So that's the duration where Aligned wants to be paid back for the services that it has rendered to the user, right? So the idea would be that Aligned has a specific TTL and this agreement between Formica and Aligned that, okay, this is the time duration where I would like my users to settle my tabs, right? I'm okay with opening tabs and I want to be settled in this time duration. Those are the rules that will be enforced on these guarantees that Formica provides to the user, right? And using that which he or they get the service from Aligned. But in this case, the source of funds comes still from the user because they have this vault deposit. But there is a very interesting approach here that we will not take in the first iteration because that requires a lot of thinking, is that it opens up a market for liquidity providers. Like big liquidity providers could come in and they could lock money in a vault, earning yield. And when you have a bigger money pot in these vaults, it gives you more and more passive income, right? While your money is being used by Formica users to actually get these services from Aligned.
I see.
Why I'm saying it has to be later is because we need to figure out a way to build a reputation score for these users, because we won't let anyone get the access to that credit because that is very risky. So this will be like a kind of a tiered approach per se. This is like immediately from the top of my head, right? It'll be kind of a tiered approach where like a user of Formica who has built reputation because they've always settled tabs on time, they could be enabled to kind of take this, like a small percentage of this credit from a liquidity provider.
I see.
Where these LPs also earn interest on the kind of this.
Yeah. So say like you don't want to have to sell some USDC that's sitting in your vault to pay Aligned in ETH or Aligned tokens. There can be a market for liquidity providers and like this sort of, like you said, a market that lets them settle on your behalf. So you pay them USDC very easily and they do the swapping however they want, and they make sure that your ETH
Yes. And in this case, they are the recipients of the Formica guarantee and not Align anymore, because Align gets the money.
Gotcha. Okay. So, okay, cool. So you basically, sort of like, I don't know if rehypothecate is the right term here, but you sort of like transfer the loan to somebody else. It's like a credit company transferring your debt to a collection agency because you're not paying the credit card bill, and they're like, okay, you can have this for 10% of its worth, because you think you can get at least 10% of what is owed.
Exactly. So here the risk is not at all Formica's.
Mm-hmm.
It is basically the credit line giver.
Okay.
But the way it works is that, well, you will be made whole, and that's the guarantee of Formica, right? Like it's either the on-chain transaction or the collateral in the vault.
Yep.
Somewhere you will be made whole.
Yeah. Oh, I really like this also because you're touching on so many, I think, important topics. Like I think even this credit idea, like I'm curious if you heard about the recent Kinto Finance Wildcat thing. We can talk about it later. We'll come back to just sort of like, open-ended stuff at the end. But yeah, like this touches on a lot of interesting topics, right? So on-chain credit is definitely an emerging narrative that seems to be picking up steam, but also reputation, which ties very closely into any concept of credit, right? Like it exists in the traditional finance world and like Web2, but now bringing that on chain, this is becoming possible through identity protocols. And a lot of these use ZK, which is one of the things that excites me about what we're doing at Aligned, ZK and Ethereum in general, right? Like decentralized identity is one of the, and like decentralized reputation are some of the ideas that like nerd sniped me and got me into crypto and like brought me down the rabbit hole. I was like, oh wow, there are different ways we can build reputation systems that are better and more trustless than what we have right now. There's a longer story there, but this is being one of the problems that I got into crypto through DeFi. Being a scientist, I saw a lot of problems with how academia is kind of broken, from publishing to reputation and attribution and of course funding. And that's why identity and reputation systems were something that got me really excited about crypto, realizing you can build better things with these primitives. So I really love that. That's like, there's ZK-TLS, which has a role to play in here, I'm sure it's something you've been thinking about. I don't really have a point there. Just curious to hear your thoughts on that, and also any early ideas you have around reputation systems. Identity.
So I think right off the bat, Formica has access to the interactions being placed between the borrower and the lender, right? And in this case, we know when the tabs are open and we know when the tabs are being closed, and in how many cases is the lender going to the vault and taking the money out, right? So we're aware of these things happening. So these are the metrics that let us build like a local credit kind of profile of people that are utilizing Formica's services. Why it's interesting for these users to actually build a better credit score is because there's indeed a lot more use cases you can actually unlock if a liquidity provider allocates you the money. Now, I'm going to tease at the high frequency trading aspect of this, right? There is so many things you can do if you are being fronted money by an external party, that it is in your favor to actually act, and in Formica terms, honestly, right? Because your money is earning yield. It is not being touched by any of the lenders that you're interacting with. It sits there, earns money. And in addition to that, you're able to leverage more money from other liquidity providers to do anything else you want outside the scope of lending services. So the reputation would come locally from the metrics that we already have, but there's indeed a lot more factors we could consider that I haven't been able to think about yet, because as I said, this is like the iterations beyond what we're working on now.
I mean, always just kind of curious about all that. Actually, this just reminded me, I don't know if you saw this, but Self Protocol and Aave, did you see this announcement they made?
Haven't, no.
This is cool, and I can basically. So do you know Self, like the passport verification?
I've heard of them, yeah.
Yeah, so they use ZK. Basically, if you have so this spun out from Cello, or like C Lab, the company in Cello. So it's really cool, right? And I think with Cello's story and the sort of micro payments and maybe like micro loans that they are trying to enable in different places, like this makes sense for them because they basically built a protocol. It's very similar to ZK Passport. There's some differences, but same general idea. You verify your identity, that you're a unique person, or at least that you have a unique passport, because there's this whole, international database and all these like hashed trees of inclusion that you can use to prove that your passport is legit and that you are this person. And what they're doing with Aave is they're integrating it so that way, if they can give higher yield to verify humans, which I haven't thought about it too much. Like, do we need all people to prove their humanity to get better yield? Does this actually help with credit worthiness in something like Aave, where it's over collateralized anyway, and they can just liquidate you if the value of your collateral drops too much? I'm not sure, but it is an interesting addition to this trend, which is if we can prove you're an actual human and you have some real credit score in the real world, and some like positive social reputation, then you can get better terms on your loans.
Yeah, true. And I think these parallels that are being created with things that have worked for years in the Web2 world, but are now being made more trustless, more decentralized, are applications that really excite me about our space right now.
Yeah.
And like you shared about like the reputation and all the things that brought you, the DeFi aspect of crypto that actually brought you into crypto. For me, it really was the community and how innovative it is.
Yeah.
It really was.
Yeah. I first got pulled into it and excited by it because of these ideas, and the ideas like really just Ethereum being a coordination machine, but it's the people, of course, and the community that made me actually want to work in the industry, and why I'm excited to go on Twitter every day.
Yeah, every time you open Twitter, it's like so many new things happening. It's amazing.
For someone like me with diverse interests, it's great. Every day something new. So yeah, back to Formica. Just the last little bit of the stream, like what you did sort of answer this already, but I want to ask directly, which use cases you're most excited for? So like paying for something like Aligned is obviously that's relevant to us. Like this will be, I think, a useful addition to what we've built and what we're building, but I'm sure you have other use cases in mind.
Yeah, 100%. There's so many. There's so many. But you know what I'll do? I'll keep it simple because I don't want to overload our listeners right now. But I'll break it down into the now, the next, and the future. Because that kind of helps us being grounded. So now, as you know, we're like focusing on off-chain compute services like AVSs, right? And also we're partnering with Agentic platforms. So we are partnering with Ensemble Codes. Actually, I don't know if you've heard of them, but they're doing a really cool. So basically, they're building like the Fiverr of AI agents, like the gig economy for AI agents. So these services, they often need to be paid quickly, and if not, there are like so many microtransactions happening that there needs to be kind of a way to settle it cheaply, right? And that's what like we're doing without asking users to pre-fund everything for these platforms, right? So what Formica is doing for AVSs and agentic platforms is basically giving them instant guarantees while staying completely non-custodial. Like, no, I don't want the money of the user to be locked in my protocol. It's insecure. What I'll do is that I'll actually leverage guarantees and make it more secure, right? What's next is, let me just say it. So gaming is huge, right? And it's obvious. There's so many microtransactions, millions of dollars worth of microtransactions, right? And there's a lot of Web3 gaming things happening as well. And again, I feel like I'm repeating this over and over again. It's all pre-funded, right? It is all pre-funded, and it's either preload a wallet or bridge funds or rely on custodians. That's awful UX, right? And with Formica, what we can do for gaming is basically enable in-game purchases that could be completely instant, seamless, and of course, really trust minimized because of the way I've told you the architecture works. And what's interesting that's happening in the gaming space right now is that about this whole, I would say, petition with Steam and Visa and MasterCard saying we're not going to support some kind of games, and then Steam having to remove them from the platform. So deplatform, I don't know the word, deplatforming is
deplatforming,
deplatforming. That's happening in the gaming space right now. And a lot of these different developers, they're looking for alternate rails to actually pay. And that's where Web3 can come in. Web3 can solve these pain points for a lot of developers who have been deplatformed for some personal beliefs that are, happening. And again, with Web3 Rails, Formica is a complementary, right? With these games, Formica can really help. And in the future, and this is what I'm really excited about, it's like your retail and daily spending can be powered by yield, right? So basically, imagine you put your funds in a stablecoin vault, right? Which is earning yield, and your yield covers the daily macro spends. Like you can buy coffee, subscriptions, taxi rides, while your principal keeps working for you, right? That's a few years out maybe, but technically very plausible. And Formica is the kind of layer that would let that happen. So that's like the next future.
Cuts out, basically, it's like, credit. It's like, oh, I really like that, because right now I imagine how this could work, right? My stablecoin yield in a vault could pay for my daily transactions, but there is this big friction there, which is I have to liquidate a bit of that on a monthly basis, withdraw it from my wallet that has that I so it's like withdraw from the vault, withdraw from vault from crypto to fiat, and then pay my credit card, right? Where in this case, instead of paying a credit card, I would just pay directly through some Formica Rails and not have to, take stuff out of the vault. Which saves time and money and is more capital efficient. That's really nice.
That's true. So, and Formica, we're also planning to kind of partner with off-ramping services. And there's like one partner we're actually in conversations with. They're doing brilliant stuff with off-ramping. And I saw a demo and I was really, really like excited about their product. And we're like partnering with trying to partner with that service as well, because some merchants might not want to face the complications, well, double quotes, complications of crypto, right? And they might just want the money in the bank account, which Formica can enable with the right partnership of like an off-ramping service. And fun fact, I'm actually speaking to, so in my city, there's like 3 or 4 restaurants that I have so again, the personal shopkeeper relationship. So I have relationships with them, and I'm like trying to pilot once there's a test network already and there's more of a product that can be used. I'm trying to have a small pilot with them to accept Formica payments. So people will go and pay in stables, and they can trust me, right? They know where I live. So if they don't get paid for their food, they can come to my house. It's a small pilot with a bunch of friends, but we're already pushing this there.
So. That's great. Oh man, Akash, so much cool stuff. I don't want to keep you too long, but just maybe last 2 questions. First is, what stage is Formica at? You did mention some of this already. You mentioned Testnet coming at the end of September. But yeah, like where are things at? What can people expect next?
So I would say that we're at a practical execution focused stage right now. As I already mentioned, we're launching Testnet by the end of September, and we're doing close pilots with partners like Aligned and Ensemble Codes. I already mentioned what Ensemble Codes is doing, right? Like this really cool agentic gig economy. The pilots are kind of short and sweet, right? They help us collect real user feedback, validate UX flows, and kind of iterate, not just on the way our protocol is correct, but also on everyday usability, right? Meanwhile, this is happening, we'll also open source the code at testnet launch. So basically the community can audit and test and contribute, right? I think our mainnet is targeted for next year. I don't know which quarter, like maybe second quarter of next year. So the sequence is basically like this. So we are at the private pilot phase right now. We are open sourcing a test network. We really want community feedback, and then we want to go to mainnet. So we're basically trying to be transparent and iterative, and not just drop something heavy and hope for the best.
Yeah. Cool. No, that sounds great. That sounds very reasonable. And of course, I wasn't expecting a super, super detailed timeline. Of course, these things sometimes take longer than expected, and you're building a very, very, I don't want to say complicated, but there's a lot of moving parts. It's a complex product, and there's a lot of stuff that you need to get right for it to be secure. But you are no stranger to building secure systems, so I have full faith that you can deliver on this. Gosh, that's awesome. I maybe a closing question, which is, how can people get involved? Do you have any calls to action? Like if people want to follow along, if people want to be part of the community, is there anywhere you want to point them for now?
Yeah, so we want people engaged at like all levels, right? So for builders out there, our early partnerships are gold, right? Work with us, integrate Formica, and you'll reduce the payment friction for your users, right? While the win-win for us is that we learn how to make product better for like other use cases, other workloads, right? For investors, we're open to conversations. We need help accelerating audits, accelerating hiring, and actually go to market, all of which will be useful to the whole of Web3. And of course, developers, we will be open sourcing the code at Testnet, as I already mentioned. Fork it, run it, break it, and contribute, right? And the best way to reach us is like either our website, formica.xyz, socials. We have some socials that Align was nice enough to tag in their tweets. I can share my Calendly. Just pick your poison. We want real conversations, and we welcome them. We'll spare time.
Awesome. Yeah, that sounds great. So of course, yeah, if you're listening, follow Formica and you'll get all the updates there, but also reach out to them if you want to chat more. Yeah, Akash, I that really covers everything I wanted to ask you about. I don't know if you have any questions. Sorry, there's something distracting me. Well, we can talk about that after. Yeah, like I wanted to come back maybe just for a brief second before you wrap up about this kind of private credit thing, and you haven't seen it, so I'm maybe just telling you about it for the first time. But Wildcat Finance, they have these uncollateralized lending platforms, right, where it's a permissionless market. They basically just make sure that the entity who's opening the line of credit, who wants to take out the loan along some specific terms, that they're a real legal entity and that they kind of like exist in meat space, in the non-Web3 world. And the first, I guess, like the first default happened just like this week. So Kinto Finance, I don't know too much about them, but they were, I think, a DEX or something. Maybe not a DEX, but they're a protocol on Arbitrum. I don't know if it's a lending protocol or what, but they had an exploit a little while back, like $1.6 million hack. I don't know the details of the exploit, but basically to try to refund users and make them whole, they took out a line of credit on Wildcat with some very attractive terms. It was something like 2.5 month lockup, and you would get I think 5 or 10% for this, something crazy. And they basically just needed a short-term loan to be able to pay this off and recover. But they actually just announced, I think 2 days ago, that they're shutting down. They weren't able to recover. So basically, the lenders on Wildcat are able to get 75% of what they put in, and it's up to them to claim, right? So that was kind of interesting, right? I mean, I think everyone expected this would happen at some point. This is the risk that you take on for yield from providing credit, right? I don't know if you have any thoughts around that or musings in general, how you think about risk, and if there is any potential risk that can potentially arise in the way you're designing this. This is really kind of open-ended. I'm just curious, general kind of thought.
That's a really good question, actually. I think if I really had to ponder over this question, first of all, I'll have to really go through what happened, because right off the bat, this sounds very kind of, I would say, realistic that would happen. Just have to understand what went wrong. But the idea of reiterating the product, especially because we know it's a bit of a risky market right now, right? And also the service that we're providing is risky because there is services being offered without being paid. So the trick here would be to iterate, and that's why we have this private test network. But what's really important is also to have adjustable kind of these collateral ratios. You said that there was a 75% lending ability, right? On what is that based on, right? Yeah. That's the biggest question, because there are haircuts that are very relevant when it comes to margin loans, at least. So when you have bonds, because bonds are more secure, there is, let's say, a haircut of 20%. So you can lend 80% of that as a line. If you have stocks, that's 50%. And this is based on real data, real risks in the traditional finance world. So what's important is that also, lately there's a lot of vol providers that are working on risk profiles.
Yeah.
So you as a user, you can kind of opt for a risk profile, and then based on that you get yields. it really depends on the kind of configurableness of risk profile as well. If we know that there's a specific user that has a vault, which is a Formica vault, but it's still higher risk, there's going to be a larger haircut to minimize the risk, not for us, but actually for the service providers.
Yeah. That makes a lot of sense. And there's, I'm sure, a lot of people in TradFi excited to apply their risk management and risk modeling ability to these sort of new markets, which really need it, right? Like as crypto matures, I think we're going to see a lot more of that expertise coming into the industry.
Absolutely.
To enable more capital efficient markets and systems for people and businesses and everything in between. So yeah, Akash, I want to talk to you so much more about all this, but I also don't want to keep you all day. So yeah, we'll save some of this stuff for next time. Risk management and how to, again, for another time, how to incorporate all this into like a protocol, how to like protocolize it, so to speak. It's all the other, cool stuff that Formica can enable. So with that, I think we can wrap up. So everyone who's watching, thank you for tuning in. Stay tuned for more news. We'll definitely share updates from Formica on Twitter. So follow them, but we'll probably be doing some blog posts together talking about different things. A quick announcement for people listening. We just recently at Align started talking about the ZK Arcade initiative. We are going to be having an alignment session stream. These are our weekly update streams. We're doing one tomorrow with the founders and myself to share some details about that, plus our usual updates. We'll probably talk about Formica a little bit. So tune in there. I definitely recommend it if you're trying to figure out how to get whitelist spots and you're excited about this. Tomorrow's stream is going to be a good one to check out live. And that'll be live here on X. And as usual, thank you for watching. If you're watching this on YouTube later on, there's a whole bunch of other ones. And let me know if there are specific topics or guests you'd like to see on the stream. And with that, Akash, closing notes before we sign off.
Yeah, perfect. So Boris, first of all, thank you. It was really a very interesting conversation with you, and it really made me, think a lot and come up with ideas. And thanks to everyone who tuned in. There's one thing I want people to remember, and it's this, right? Building payments for Web3 isn't just a product or an API decision. It's a philosophical one, right? If you're building in Web3, which is a decentralized service, you kind of have to need an infrastructure that isn't a workaround that ruins that security decentralization. And basically, the idea is that if you are decentralized as a service, you should have a decentralized, secure payment infrastructure in place as well. And that is basically what Formica is doing. Web3 services with Web3 ethos.
Beautiful.
Perfect.
Okay, well, Akash, thank you again, and excited to chat more soon. And
thanks
for watching, everyone. Bye-bye.